Hey guys, Akil Stokes here. Welcome back to another episode of The Trading Edge. If you guys are brand new, thank you for joining. Typically, this is a video that I put out each weekend, spending some time showing you the best trading opportunities that are on my radar for the week ahead. However, today we're going to do something a little bit different. I recently got a request from social media. By the way, if you guys don't follow me on social media, make sure you do so. And if you do, don't be afraid to reach out and ask questions. I don't bite. I love to talk trading. I love to talk business. I love to talk entrepreneurship. I love to talk sports as well. So feel free to engage in conversation with me. But the particular question asked or put out a request, hey Akil, I'm a little confused about entry types. Can you please go over them? And I thought this would be a perfect follow-up on the video that I put out 2 weeks ago that talked about the 5-step process of trading, right? If you remember, we talked about the exploration phase, we talked about the learning phase, we talked about the testing and the trading phase. And when we got to that trading phase, we kind of broke it down into 3 areas. It wasn't just go straight into the live markets. No, it was your back testing, it was your demo trading and your forward trading. And the purpose of that demo trading is to make sure you understand how to actually not just read the markets in real time, but actually execute your orders. So this is a perfect topic to follow up on that. Now, do me a favor before we get started. Take a second to smash that like button. If you haven't subscribed already, make sure you do. I do a lot of stuff here on YouTube. I do a lot of stuff on social media, basically new content each and every day. Make sure you don't miss it by subscribing and following on whatever social media platforms you're on. All right, let's hop into the video talking about different types of orders. Take notes. All right, so in this video, we're gonna talk about 4 types of orders. We're gonna talk about buy stops, sell stops, buy limits, and sell limits. And for just the purposes of this video, because this is what the specific question was about, we're only going to talk about them in terms of entry. So everything we talk about today is going to be looked at in the realm of how can I use these 4 types of orders to enter a trade. Now they do have different uses. They can be used as exits as well, or target taking. If you want to talk about that, just type it in the comment section and below, and maybe I can find a time to put out another video talking about stops and targets. But today the focus is on entry. So we're going to start first with a sell limit orders, because I think limit orders are going to be more of the popular ones used. And a sell limit order is used when we want to sell at a particular price that is currently higher than the price that the market is trading at. So if you look at my chart right now, I'm on the euro dollar, not that it matters what it is, but we're currently trading at 118.47. So let's say I wanted to be a seller aggressively if price action came to retest our previous level of structure resistance up here at 119.60s. What I would use to get involved in the trade is a sell limit order. So I'm right here on NinjaTrader. NinjaTrader gives me the ability to trade directly from the platform, meaning if I set a few things up, I can literally right click my button. You'll see a little drop box comes out, and I can order right here. There are also uses on Ninja where you can go to the control panel and just enter it in manually. That's a way as well. My advice is before you get into trading, right? This is another part of that forward trading and demo trading experience we talked about a few videos ago. Before you get into trading, learn how to use your platform, learn how to buy and sell. This should end up being like second nature, because I'll tell you what, when live opportunities happen in the market, they can often happen pretty quickly. They can come with a little bit of pressure, distress, whatever you want to call it, depending on what stage you're at as a trader. And it's very easy to make an accidental mistake. I can't tell you the amount of times I was supposed to put a buy limit on there and I put a sell stop on there or something ridiculous and ended up being involved in the wrong way. But I'm going to go sell limit right here. So I'm going to click the sell limit right there. It's going to ask me for confirmation. I'm going to keep that on just in case I make any mistakes. But you can see that on my chart is going to be my sell limit order. So again, what this means is that I'm looking to sell if price action were to rally up to this level. As soon as it hits this order entry or goes through by a few pips, you always have to take the spread into account, I'm going to be triggered for a position to the short side, meaning I'm going to be selling price in anticipation that we're going to go lower. So this is an example of a sell limit order. Again, we want to use it when we're looking to sell the market at a price above what we're currently trading at. So price has to go up to reach our order. All right, now that we've gone over sell limit, the next one is going to be buy limit. This should be pretty simple because it is the exact opposite of the sell limit, right? In the sell limit order, we're looking to sell. A buy limit, as the name says, we are looking to buy. So let's say that we are looking at this price chart. We're anticipating a breakout of this double bottom. This is actually something that I'm actually anticipating, and we talked about this in the midweek markup video if you guys want to go back and watch that. But let's say I'm anticipating that price is going to come down to, let's say, our next VS1 level down here. So this purple box sitting right around, we'll take the top of it, right around 117.26. And I'm telling myself, if price action comes down to that level, then I want to be a buyer. I want to be an aggressive buyer. This is where I'm going to use a buy limit. So again, I'm looking to be a buyer. My buy limit order needs to go below, so at a cheaper price point than what the market is currently trading at. Once again, I'm going to right click. I'm going to click my buy limit order. I'm going to confirm.
Order submitted.
Right? And then you can see my buy limit order is going to come right at that level. So again, if price action were to break out to the downside, as soon as we hit this price point and break through by whatever the spread is, right? Brokers always got to get paid. Then I will be filled in a long position. So a buying position where, in order to make profit, price would have to go up. So a buy limit order is going to go below the current price point in the market. And what it does is, as the market is moving lower, you're going to get triggered for a buy if that price point is hit. Now, the next type of orders we're going to talk about are going to be stop orders. And this is where things get a little bit tricky. I think it's because of the name stop that traders often assume a stop order is only used for stop loss. Maybe they should give it a different name, although I guess it is used for stops as well. So maybe the name fits. Anyway, I can certainly see how it can be confusing. But stop orders can also be used to enter a trade as well, and I'll show you how. We're going to take a look at, what do we do? Let's do a sell stop order here. So let's say I'm looking at this double bottom right here, and I am a breakout trader. I am saying that I am anticipating this double bottom to be violated. If we break out to the downside, same anticipation, I'm anticipating that the market's going to go down to this lower VS1 level. So I want to be a seller at the breakout. Something I may want to do as a breakout trader is give the market a little bit of a buffer zone, of course, but say to myself, if price action breaks out to this particular level, I'm just choosing a random mark here, 118.32, then I want to be involved in that move. Again, we're anticipating that the market is broken, that there are some sell stops underneath here from the buyers that failed, and that if those sell stops are taken out, right, we're going to see a massive amount of selling pressure on the way to the downside. Again, a better explanation for this is in the weekend the midweek market video, but just to kind of give you some guidance on why a trader may be looking to sell at this position. Now, instead of a limit order, I'm going to use a stop order, a sell stop order. So once again, I'm going to right click, right? You can see how my price point is below, right? So I'm selling. This has to be below our current price point. And I'm going to enter my sell stop. And what this is going to do is, right,
order submitted.
It's going to place my order right below that current price point. And if price were to go down, then boom, I would be triggered in the same direction down, right? We can go straight into a buy stop because I think it's easy. A buy stop is going to be the exact opposite. Let's say that
order canceled.
I'm looking for a breakout of this area. I'm saying that if price action breaks the peak of this double bottom, this is going to confirm that the double bottom was correct and that we should see some type of movement up to our next level of structure. So what I want to do is I want to put a buy stop order, right? I want to be a buyer in this case. I want to put a buy stop order right above that level. That way, if price moves up, then I'm involved in that breakout. So I right click, repetitive, I know, but this is how you get the point across. Hit that buy stop order, confirm it,
submitted.
And then boom, a buy stop is right there. Once again, if price action rallies up, then I'm going to get filled in the direction. So a very easy way to think about this is that your limit orders are going to be trades that are in the opposite direction. So a sell limit is going to be above price, and if price goes up, your sell limit is going to take you down, right? So you're going kind of against the grain. You're going in the opposite. You need the opposite type of movement to get filled. A buy limit, right? You're looking to be a buyer. Price has to go down in order for you to get your buy order filled, and you're anticipating that price will go up. So limit orders are going to be they're going to require the opposite type of movement in price direction. You're looking for some sort of reversal at that specific level. Buy stops and sell stops, right? Your stop orders are going to be in the same direction of the move. So as price goes up and you put on your buy stop, you're involved with that movement going up. If you use a sell stop, as price goes down, your sell stop is triggered in that same direction. So I actually left out two types of orders, and these are going to be called market orders, a sell at market and a buy at market. And what these orders are going to do is they're going to allow you to get involved in the trade right away. So with the limit orders and the stop orders where we were setting them in advance, if price action comes to this level, then I'll get long, or if price action comes to this level, then I'll get short. Market orders are going to get you involved in the trade as soon as you push the button. So typical uses for these are if you're actively watching the charts and you see that price comes down to a level of your liking and you want to buy right at that price point, then boom, you would hit either a buy at market to get long or a sell at market to get short. Or if you're waiting for some type of candlestick formation or simple pattern confirmation, something of that sort, where if I get a higher high, higher close on this specific candle, then I want to enter as soon as that candle closes. As soon as that candle closes and the new candle begins, you would use that buy at market order. So different platforms are different. Obviously, as I mentioned earlier, you got to find out where it's at on your platform. Here on NinjaTrader, I just open up my my little chart tab, my chart trading tab to the right, and you can see at the very top, buy at market, sell at market. As soon as I want to enter this trade, boom, I click the button and it gets me involved. Now, before you leave, make sure you hit that like button. Also, if you have any questions or comments or topic ideas, make sure you leave it in the comment section below. I do go through and I read each and every one of them. Many of the comments that you leave become either future episodes here on the Weekend Trading Edge, or we discuss them in future episodes of the Trading Coach podcast. So I am taking what you guys say seriously. I'm not just saying leave it for the YouTube algorithm or however that works. I actually read them, I will respond, and I think it helps our channel become the best channel possible for newer traders who are looking to grow. All right, I'll see you guys next time. Until then, plan your trade your plan. You guys have a great weekend.